In the ever-evolving world of cryptocurrencies, Bitcoin has consistently been the star performer, captivating investors and tech enthusiasts alike. As we approach 2025, a bold prediction has emerged. Bitcoin's price could soar to an astonishing $200,000. This video delves into the factors that could propel Bitcoin to such heights. The halving effect, Bitcoin's built-in bullish mechanism. Bitcoin's halving events are integral to its market dynamics. The latest halving took place in April 2024, reducing the block reward from 6.25 BTC to 3.125 BTC. Historically, halvings have triggered major bull runs due to their impact on supply. The 2020 halving, for example, saw Bitcoin's price surge from approximately $8,500 in May 2020 to nearly $64,000 by April 2021. The logic is straightforward. Reduced issuance means a lower rate of new coins entering circulation. With fewer coins available, supply tightens if demand remains steady or increases. This scarcity can create upward price pressure, as evident in the post-halving rallies of 2012 and 2016. As the 2024 halving plays out, market watchers anticipate a similar trend, potentially pushing Bitcoin's price toward the coveted $200,000 mark by 2025. Institutional adoption. The big players enter the arena. Institutional adoption of Bitcoin has ramped up significantly over the last few years. Companies like MicroStrategy have led the charge, amassing a staggering 158,245 BTC, worth over $4.2 billion. This trend reflects a growing belief among financial powerhouses that Bitcoin is not just a speculative asset, but a legitimate store of value. Additionally, major banks, including JP Chase and Goldman Sachs, have integrated Bitcoin into their wealth management services, catering to high-net-worth clients. This wave of adoption has been supported by the launch of Bitcoin ETFs in the US and other major economies. The cumulative effect of these investments is not just validation of Bitcoin's potential, but a significant driver of demand that can push prices higher, especially when more traditional investors enter the space. Regulatory clarity. Governments set the ground rules. Regulatory clarity is a cornerstone of market confidence, and recent developments in 2024 have been promising. The U.S. Securities and Exchange Commission has made strides in establishing clearer guidelines, allowing Bitcoin ETFs to operate with more regulatory support. Moreover, the 2024 U.S. presidential candidates have both shown favorability toward Bitcoin, marking a shift in policy that could bring legislative benefits. In Europe, the Markets in Crypto Assets regulation was officially enacted, setting the framework for comprehensive cryptocurrency oversight. These efforts help mitigate fears of sudden crackdowns and foster trust among retail and institutional investors alike. When regulations are supportive, they pave the way for more secure and large-scale investments, boosting liquidity and driving up the price. Global economic factors. Inflation and currency devaluation. The global economic backdrop has painted a compelling narrative for Bitcoin as an inflation hedge. In 2024, inflation rates in many developed countries have remained stubbornly high, with the US seeing annual inflation figures hovering around 4.3%. This economic strain has pushed investors to seek alternatives to fiat currencies, which can depreciate in value. Bitcoin, with its fixed supply of 21 million coins, offers a stark contrast to the limitless printing of fiat money. Moreover, countries like Argentina and Turkey, which have experienced double-digit inflation rates for years, have seen significant upticks in Bitcoin adoption as citizens turn to it to preserve their purchasing power. This shift in perception, viewing Bitcoin as digital gold, reinforces its role as a store of value in turbulent economic times. Technological advancements, scaling solutions, and network upgrades. Bitcoin's journey has not been without challenges, particularly regarding its scalability. The network's base layer can only handle about 7 transactions per second, which is far less than conventional payment networks like Visa, which can process over 24,000 TPS. However, the introduction and expansion of the Lightning Network have changed the game. This Layer 2 scaling solution allows for faster and more cost-effective transactions by moving them off the main blockchain. The growth of nodes and network capacity has reached all-time highs, indicating that more users are leveraging this technology for microtransactions and daily use. These advancements not only improve the network's efficiency, but also broaden Bitcoin's use cases, positioning it as a feasible payment option and boosting investor confidence. Market sentiment and media influence, the hype factor. Media coverage has historically fueled Bitcoin's price surges, and 2024 has been no different. Positive endorsements from prominent figures, such as Elon Musk's reiteration of Bitcoin's long-term potential and statements from investment moguls like Cathie Wood, have kept public interest peaked. The rise of social media platforms has amplified this effect, creating viral trends that draw new investors into the market. Additionally, the Fear and Greed Index, a tool that gauges market sentiment, has shown consistent periods of greed throughout 2024, indicating strong bullish sentiment. This phenomenon of FOMO, driven by media influence and social endorsement, continues to attract retail investors, fueling further price increases. Supply dynamics, the 21 million cap. One of Bitcoin's most defining features is its fixed supply of 21 million coins, expected to be fully mined around 2140. As of 2024, over 92% of Bitcoin's total supply has already been mined, intensifying scarcity concerns. This programmed scarcity contrasts sharply with fiat currencies, which governments can print at will, leading to devaluation and inflation. The concept of limited supply in conjunction with increasing demand adheres to the basic economic principle of supply and demand, suggesting higher valuations as the circulating supply dwindles. Investors view this built-in scarcity as a unique attribute that positions Bitcoin as a robust store of value, akin to precious metals, but with more utility in the digital age. Geopolitical events, Bitcoin as a safe haven. Geopolitical instability often triggers a flight to safe haven assets, and Bitcoin has emerged as a top contender in this category. The geopolitical landscape, marked by ongoing tensions between major global powers and economic sanctions in certain regions, has accelerated Bitcoin adoption. In countries experiencing severe economic sanctions, such as Venezuela and certain parts of Eastern Europe, Bitcoin usage has spiked as individuals seek financial autonomy. Data from blockchain analytics firms has shown an increase in wallet activity originating from these high-stress regions, signaling that Bitcoin is being used not just for investment, but as a lifeline for everyday transactions. This role as a decentralized, censorship-resistant asset bolsters its appeal and contributes to rising demand. Technological integration, Bitcoin in payment systems. Bitcoin's journey from a niche digital asset to a mainstream payment option has gained momentum. Major payment processors like PayPal and Block, formerly Square, have expanded their Bitcoin services, making it easier for merchants to accept crypto as payment. Moreover, partnerships with retail giants have started to emerge, allowing customers to make purchases using Bitcoin. This increased integration is not only symbolic of growing acceptance, but also practical for everyday use, enhancing Bitcoin's value proposition. Furthermore, countries like El Salvador, which made Bitcoin legal tender in 2021, have expanded their adoption models, showcasing real-world applications and encouraging other nations to explore similar frameworks. The ETF effect, easier access for investors. The approval of Bitcoin exchange-traded funds has revolutionized how traditional investors access the cryptocurrency market. Spot Bitcoin ETFs have become widely available in countries like the US, Canada, and parts of Europe, simplifying investment for those who prefer traditional finance routes. These ETFs have collectively amassed billions in inflows, signaling a robust demand for Bitcoin exposure through regulated channels. For instance, the ProShares Bitcoin Strategy ETF reported record inflows of $1.4 billion in just its first quarter of 2024. This new wave of interest has provided additional liquidity to the Bitcoin market, contributing to upward price pressure and stabilizing price movements by broadening the investor base. Thanks for tuning in to our deep dive into why Bitcoin could hit $200,000 by 2025. If you found this video informative, don't forget to hit that like button and subscribe to our channel for more insightful content on finance. Drop a comment below with your thoughts or predictions on Bitcoin's future price and share this with friends who are also keeping an eye on the crypto market.